Hello again, everyone. It's Vince Fuller from TradingWinds.com, and this is our update for September 4th, 2017. Hope everyone's having a great long weekend. Let's take a quick look at how the markets finished off last week and what we might expect with the short week ahead. Stocks actually on Friday did close slightly higher. The Dow was up 39 points, but as you can see here, let me zoom in. We now have the futures that have opened. That's what this little candle is all about, and we've already opened lower. That's mostly due to the situation with North Korea. We'll talk a bit more about that in a second. The S&P 500 was up 5 points on Friday, while NASDAQ was pretty much unchanged, and the Russell was up nicely, up 8 points. Bonds were down pretty strongly here, down over $1 on TLT, which is the ETF for the 20-year Treasury, getting back to that 20-period moving average, that upsloping 20-period moving average. On decent volume, though, as you can see, higher than average, which was interesting. So we'll see how the week ahead goes for bonds. Gold continues to move higher very, very nicely. So we obviously know we broke out of this range last week, and we talked about this quite a bit. We're now seeing that follow through, and this should continue. Crude on Friday was up slightly, up 21 cents at the close. Not that big of a deal. Now, over the weekend, well, actually, I should say there's a couple things. First of all, Friday, we did see stocks close higher, but there are a couple red flags. Number one was the jobs report that came in lighter than expected. It did come in at 156,000 new jobs compared to an expected number of about 180,000. Now, the market obviously overcame that because that news came out early in the morning, and they did close higher. But that really, the wind was taken out of the market sailed later on when North Korea decided to conduct another missile test early this weekend, and is actually talking about conducting yet another one. Despite all the tough talk coming out of Washington as well as China and South Korea, etc. So this continues to be a concern, and you can see that the futures right now have opened lower, down about 50 points on the Dow, down almost 6 on S&P. The Nasdaq's down about 10 points. So we really do need to keep an ear open for any new developments on this situation. This is the kind of thing that can really turn the markets around. So at this point, there's nothing to do because we really can't control it other than make sure you're protected. If you've got too much in one position, you want to lighten up a little, get it under control. If you're holding stocks, you may want to marry a put with those stocks just to lock in an exit price for yourself should something escalate here, much quicker than any of us hope to ever see it escalate. But this is a serious concern. Obviously, we have very little control over it, but we do have control over our own accounts. And so I really, really encourage all of you to relook at your portfolios. Make sure that you have protection in place for this. If you leave yourself wide open and the market turns around quickly, you will get hurt, and we never want to see that. Okay, so with the week ahead now, even though it's a short week, it looks like we're opening to the downside here. Excuse me. We do want to wait till tomorrow morning, see what the futures are like first thing in the morning. But also on tap for news this week, Tuesday we have factory orders. Wednesday, MBA mortgage apps number and the Red Book. Thursday, jobless claims and money supply. And Friday, we have wholesale trade, Baker Hughes rig count, and the consumer credit number. So keep an eye on those futures. Tomorrow morning, it'll tell you where the market's going to open. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.